NIO stocks have a very high sales average. Want to know more about it? Keep watching. Hey everyone, and welcome back to our channel. In this video, we'll be talking about NIO stock sales and everything you need to know about it. But before we start, do consider subscribing to our channel and turn on the notification bell to watch more of our exciting content. Alright, let's get started. NIO, a Chinese premium electric vehicle company, has lost around 19% of its value in the previous month, outperforming the S&P 500, which has remained relatively stable. The drop comes after the company's lower-than-expected Q4 delivery guidance and broader selling pressure in US-listed Chinese stocks after Didi Chuxing announced its intention to delist from the New York Stock Exchange less than 6 months after going public, citing regulatory pressures in both the United States and China. The longer-term picture for NIO, on the other hand, hasn't changed much in our opinion, and the current challenges appear to be relatively temporary. The demand for electric vehicles in China is still robust, and NIO plans to increase manufacturing capacity at its Hefei facility to 240,000 vehicles per year by the first half of 2022. The company is also growing its product line with the ET7, the company's first sedan, set to be on sale in the first quarter of next year, and 2 more models in the works for 2022. NIO should be able to grow steadily in the next few years as a result of this. The Chinese premium EV manufacturer saw its shares fall by around 5% in the last 5 trading days, lagging the S&P 500, which remained roughly flat. The drop comes as NIO forecasted lower-than-expected deliveries for the current quarter owing to the auto industry's continued supply chain issues, as well as the company's decision to retool its manufacturing lines for new models and increase capacity. While NIO delivered 3,667 automobiles in October, it forecasts Q4 deliveries to be between 23,500 and 25,500 cars, about flat with the 24,439 vehicles sold in Q3 2021. So, do you think the stock will continue to fall in the near future, or do you think it will rise? According to a machine learning study of stock price trends over the previous 3 years, NIO stock has a 61% chance of rising in the next month of 21 trading days. NIO stock's longer-term prospects are also improving. In China, demand for electric vehicles continues strong, with NIO reporting record bookings in October. NIO's manufacturing troubles are likewise likely to be temporary. The business has stated that it plans to quadruple the capacity of its Hefei, China plant to 240,000 vehicles per year, with production likely to exceed 300,000 units with extra shifts. The company is also growing its product line with the ET7, the company's first sedan, set to be on sale in the first quarter of next year, and 2 more models in the works for 2022. NIO's business's economics are improving as well. The company's net loss for the third quarter was less than predicted, with vehicle gross margins of 18%, compared to 14.5% in the third quarter of 2020. NIO stock also trades at a respectable 7 times anticipated 2022 revenues, which is not unreasonable given the company's rapid growth and expanding margins. Electric vehicles are the way of the future, but choosing the appropriate EV stocks can be difficult. Electric vehicle component supplier stocks can be a wonderful way to participate in the EV market's growth. The luxury EV manufacturer had its stock grow by about 10% in the last month, or around 21 trading days, surpassing the S&P 500, which rose by about 3% in the same time period. While the stock suffered considerable losses in September as a result of China's Evergrande debt issue and fears about rising bond yields, it has since recovered due to a number of factors. To begin, NIO announced that it will increase the capacity of its plant in Hefei, China from 120,000 to 240,000 vehicles per year, with the expansion expected to be finished in the first half of 2022. In fact, the corporation claims that with traditional operational shifts, the factory could produce up to 300,000 automobiles per year. This should help the company to meet the growing demand for electric vehicles. Second, NIO's electric vehicle competitor Tesla reported strong third-quarter profitability and landed a 100,000 vehicle contract from Hertz, a large rental car company. This looks to have improved mood in the electric vehicle industry. NIO stock climbed 1.1% in a 5-day trading period ending October 26, 2021, compared to 1.2% for the broader market. A change of 1.1% or more over 5 trading days has a 47% chance of happening, as it has 367 times out of 781 times in the last 3 years. Electric vehicles are the way of the future, but choosing the appropriate EV stocks can be difficult. Electric vehicle component supplier stocks can be a wonderful way to participate in the EV market's growth. Nonetheless, we believe NIO remains appealing to long-term investors. Although NIO stock trades at a high 10 times consensus 2021 revenues, it should swiftly catch up to this valuation. According to consensus forecasts, sales will increase by approximately 120% this year and nearly 65% next year. Gross margins have also been increasing, rising from roughly 8% in Q2 2020 to around 19% in Q2 2021, implying that NIO should be profitable as it scales up. With the stock down roughly 37% year-to-date and more than 45% of its all-time highs, this could be a good opportunity for investors to get in. NIO stock has dropped roughly 8% in the last 5 trading days, compared to a negative 2.4% drop in the S&P 500. Over the last month, the stock has lost around 5.5% of its value. There have been a few recent happenings that have impacted NIO and other Chinese EV stocks. Given the recent regulatory crackdown on Chinese internet companies, China's Ministry of Industry and Information Technology recently stated that the country has too many electric vehicle players. This is likely causing some investor concern that the EV space will face more government interference. Separately, there are concerns that the faltering Evergrande Group, China's second-largest real estate developer, would default on its loans. The corporation is said to owe over $300 billion in debt, and a default might have ramifications for Chinese banks and credit markets, as well as other aspects of the Chinese economy. Evergrande has made a significant investment in an electric vehicle subsidiary that has yet to ship any vehicles, producing an overhang on EV stocks. Will NIO stock continue to fall after a negative 5.5% drop in the last month, or is a recovery on the way? According to past performance, NIO stock has an equal chance of rising or falling in the coming month. In the last 3 years, 142 of the 279 times NIO stock has seen a 21-day fall of 5.5% or more have resulted in NIO stock declining over the next 1-month period of 21 trading days. This historical pattern predicts a reduction in NIO stock for the next month in 142 of 279 cases, or around 51% of the time. Okay, so with that, we're at the end of the video. If you found this video interesting, make sure to hit the like button and subscribe to stay tuned for more exciting videos. Let us know your thoughts in the comment section below. See you again with another exciting video. Until then, bye!